Okay, till now what we saw was that, let's say the acquisition happened on a particular date, which was October 1 in the earlier examples. In case you haven't had a chance to go through them, I would suggest please go through all those previous videos before you attempt this one, right? That will give you a more clearer perspective and idea, right? In case you haven't been through them, you can just go to iedubook.com, where we have placed all these videos in a synchronized manner. You need to just go through the CA part, click on CA final, then consolidated financial statement, and you will get a list of all these questions, right? Now, in all the questions, coming back to the main topic at hand, we saw that there was a particular acquisition date which was given, and the profits on this date were also given, right? But what can happen is, let's say for example, your year ends on 31/3/2012. In some cases, you might be given the profits as on 1/4/2011. Then the question which comes up is, how do you calculate the profits on this mid date, right? So this is what the problem is which we are trying to address in this particular case. With that background in mind, let us read this question. Acquisition during the year and profits during the year given. So you are given about the profits during the year, but you don't know what is the profit on the date of acquisition. Balance sheet as on 31st March 2012 of H and S is given. Assets H, S, fixed assets, investments, current assets, total. Again, creditors, profit and loss account, equity shares. The acquisition of share took place on October 1, 2011. Again, something similar to what I have pointed out here. Your balance sheet is of 31/3/2012. Your acquisition is on October 1, 2011. The balance in the profit and loss account of S Limited. S Limited is the subsidiary. How do I know this? The question says investment in 70% of shares of S Limited, 1 lakh, was rupees 30,000 on 1/4/2011. The balance that I am given is of this date, right? There is no general reserve, just the profit and loss account balance. Prepare consolidated balance sheet. Now, what will happen here is your procedure and everything remains the same. In 9 out of 10 times, the key to solving these questions is the preparation of analysis of profit, right? Now, the bifurcation has to be between pre and post, right? Now, I know the profit on one date which is pre, one date which is post, but I don't know the profits on the date of acquisition. So how do I calculate is the main thing which we will see in this question, right? So let's move ahead. So let's say this is my balance sheet of H Limited, right? Again, assume this to be in the vertical format. I mean, the way I'm doing is as per the revised schedule 6, but to avoid space, I'm preparing liability side here and asset side here. The disclosure is equity and liability, shareholders fund, right? Equity share capital, reserves and surplus, minority interest, right? Then what do you have? You have current liabilities. Within this you have trade payables, which is nothing but sundry creditors. On the asset side, what do I have? I have assets, non-current, current, right? Okay, now let's start moving with the numbers that are given to us. Fixed asset 170 and 110. So both of them taken together will be 280,000, right? So in the non-current assets, I will write fixed asset. Okay. And within fixed assets, I will have tangible assets. Tangible assets are the assets which I can see. Which tangible assets do I have here? It's the total of these fixed assets. 170 plus 110, 2,80,000. Right? Non-tangible assets will be goodwill, which we will calculate And if it is not there, we will just knock this off. Right? Okay. Investments. This will go where? This will go to my cost of control. Cost of control. Investments. How much is the investment? 1 lakh. I keep on writing these short forms. Maybe for the sake of completeness, you can just practice with the full forms only. Current assets, 180 plus 160 gives you 340. Right? Current assets. Okay. Do I have the bifurcation? It's just the current assets. So I'll just take the total. 180 plus 160, 340. Right? Otherwise, if you are given the bifurcation between inventories, trade receivable, and others, you should first give those balances here and then take the totals. Right? Or you can simply reflect this here as well. Now moving on, what are the next things that I have? Creditors, 150 plus 90 gives me 240. 2,40,000 trade payables. Again, I am repeating, these additions and all has to be shown as a part of separate schedule. I am not showing it because we are just dealing with some preliminary question. As we move on to the bigger one, we will see that as well. Right? Okay. So these two are gone. Then equity share capital 2 lakh. I'll only take the equity share capital of H Limited. Equity share capital. So where do I take the balance? I can take it simply in the outer column. What about the equity share capital of S Limited 1 lakh? This is going to go and sit in the cost of control. Equity share capital. I own 70%. So 70,000 here. Minority interest. Equity share capital 30,000. Right? Profit and loss account 1 lakh. You want to prepare the reserves and surplus schedule? I don't think it is required because it's just the profit and loss that we have here. So I'll take 1 lakh as the balance of profit and loss account, and I will see if there are any post acquisition profits which belong to me. And 80,000 for S Limited. Now this is where we need to concentrate. So analysis of profit. Acquisition happened on 1/10/2011. What is the closing balance? There is a total of 80,000. Right? 80,000. The acquisition took place on October 1. The balance in the profit and loss account was 30,000 on 1/4/2011. So basically on 1/4/2011, so we have capital, we have revenue. 30,000 was the balance on 1/4/2011. Which means what? Which means that this entire profit were earned prior to this date. Since this entire period belongs to pre-acquisition period, so I will write it in the capital profits. Now the second question which comes up is that, again, just look at this timeline. 1/4/2011, 31/3/2012. So 30,000 is the balance here, 80,000 is the balance here. This means that during this period, how much is the profit I earned? 50,000, right? Now my acquisition happened on October 1, 2011, which means there is 6 months period after this date of acquisition, right? 6 months period after the date of acquisition and 6 months period prior to the date of acquisition, right? So this 50,000 represents profit earned during this 12 months, 6 plus 6, out of which 6 months are pre, 6 months are post acquisition, right? The assumptions. So let's say the revenue profits are 50,000, right? To be adjusted. Okay. What does this mean? This means that this 50,000 is not entirely revenue. This has to be splitted between capital and revenue. So therefore I have just pointed it out that this has to be adjusted. Now, if 50,000 is the profit earned during 12 months, I need to know what? I need to know how much profit did I earn up to the date of acquisition, which is 6 months from the date when the last profits were given, right? So I will split up this 50,000 into, what is the period prior to the acquisition? 6 months. What is the period after, total period? 12 months. So the assumption is that unless anything else is given, this profit is earned equally or evenly during the entire year, right? So 50,000 into 6 by 12 is the profit which belongs to period prior to the acquisition, and hence is a capital profit. This will give you 25,000. So I will reduce this 20,000 from 50,000 and I will add this 25,000 to the capital profit, right? So now if I do a sum, this will 30 plus 25 gives me 55,000. 50 minus 25 gives me 25,000. So basically my revenue, my capital profit is 55,000 and revenue is 25,000. I'm just erasing this stuff on the bottom because I now need to do the allocation. So how much does holding company owns and how much does minority own? 70%, 30%, right? 7,500, 17,500, 16,500, 17, 25, 38,500, right? So 70% is this, 30% is this. So let me repeat it once again. I knew that to closing profit is 80, opening is 30, which means that during the year I earned 50,000. But within the year the acquisition happened on 1/10/2011, which means that all the profits from the date of original profits or the opening profits until that date are also capital profits, which need to be reduced from profit during the year. So since the time period was 6 and 6 months, I distributed it equally, divided by into 6 divided by 12. 25,000 I added to the capital, 25 I reduced from revenue. I got my revenue, I got my capital, and I bifurcated it between holding and minority. Once this is done, nothing is to be worried about. We just need to place this to the relevant places. Capital profit 38,500. Share of profit of minority is what? You can either write it separately or individually. I am writing here, taking them together. 16,500 plus this, 17 and 7, 24,000. 24,000. This gives me 54,000, right? 70 plus 38 gives me 108,500. When subtracted from this gives you minus 8,500, which is capital reserve. Why? Because what I received is more than what I paid, right? So I have reserves and surplus plus capital reserve. How much is the balance? 8,500 and 17,500 of revenue profits. So revenue profit 17,500, capital reserve 8,500. Add all these three, what do I get? 18,826, 126. Minority interest was how much? 54,000. Right? Anything else? No. 340 plus 180. 5,20,000. 5,20,000. And that is the balance sheet of H Limited for closing purposes. Right? I hope you would have liked this video. If yes, you can hit the like button. You can also visit our website www.iedubook.com, where you will get serial wise questions on CA financial reporting subject. Thank you for being with us today. This is Arin Jay signing off, your educator for this video.